We've seen quite a lot of change in the past year on these trading volumes, and to put it all in context, perhaps we should start with what was happening last year, not just in South Africa, but globally. And globally we saw rather anemic trading activity on the back of low volatility and indices that were constantly climbing. So a lot of the indices, including our own, were reaching record highs that peaked in the early part of the year. During this period also, we saw international investors take a long look at South Africa because of the political developments that were accelerating, shall we say, towards the latter part of the year. And indeed, in the third and fourth quarter of last year, we saw some of our big long-only investors in South Africa either go neutral in terms of their holdings or actually go underweight. And so last year, we saw net sales by non-resident investors in our market. And of course, we had the political change that occurred during the last part of last year, and there was renewed optimism in South Africa, as you recall. And so during the first quarter of this year, several things were happening. One is we saw this renewed optimism in our political risk environment, and we saw those long-only investors return to the market. So up until even today, we are showing net purchases by non-resident investors to the tune of about 9 billion rand. And we're also seeing the size of trade during the first part of the year go down. So the average number of trades, rather, has gone down. So what that means is we're seeing larger trades come in and an increase in net purchases by foreigners.
That non-residents are now net purchases in South Africa. Does this mean that the uncertainty around our policy regarding land and also the mining charter is not something that is disturbing them too much?
We saw this change in investor configuration, if you will, in the first quarter. My sense is, as we get closer to the end of the year and as the local political risk it crystallizes, I believe we will see investors react perhaps more to a neutral or risk-off stance.
And then you say that volumes have declined as a result of investors taking on larger chunks of purchases. So does this mean that we needn't be worried about the falling volumes that we're seeing on the JSE?
Well, let me put that in a little bit of context. So what we've seen is the number of transactions has declined. So and our value traded is still up year on year by 10%. It was up in the first quarter by over 20%. So clearly we had a big jump in the first quarter of the year on the back of the renewed optimism and people taking on risk-on positions and a lot of other factors around corporate actions and so forth. We have seen that taper off now in the second quarter of the year, and I think that is on the back of several reasons. One is globally, and as you know, equity markets peaked in the first quarter and they've come off. We've had some turmoil globally in particularly technology stocks and particularly in Tencent, which is way off year to date, about $150 billion in value taken off. And of course, Tencent is a big influencer into Naspers, which is our largest traded counter in South Africa. Obviously, one of the big drivers as we speak right now is what's happening in the United States and China and Turkey and Canada and the issues around trade wars. And that has sparked real concern around the emerging market asset class. And we saw on Friday a lot of movement in the rand, but also higher volumes than what we would have expected on the JSE because of what was happening in Turkey and the fact that the entire EM asset class suffered that contagion. And again, yesterday we had almost a 24 billion rand turnover day.
Donna, it sounds like you're saying that bad news is actually good news for the JSE because it creates a lot more volatility, and good news is not necessarily great for volumes because you see subdued trading activity.
And what drives our market is not necessarily good news or bad news, but it's events. Some of those events are positive, some of them are negative. So the events in the political environment last year were positive, so we saw a surge in trading. Events in the past week with the pressure on emerging market currencies, that was negative for our economy, but that also resulted in volatility. So our market is very event-driven. We also see big increases in trading activity when indices rebalance. So again, that's an event. We see big increases in trading activity at futures closeout. So I think we will still see that same phenomenon. We had expected that we would see this surge in the first part of the year, and that if global volatility stayed benign, that would taper off. So our value traded on a year-to-date basis is up, as I said, 10%, and we're about 22 billion rand a day average value traded. The first quarter was higher because of that surge, so it has tapered off, but it's still 10% up on last year. We had expected that would taper off because we weren't certain that volatility would continue. But when you look forward, whereas typically July and August are quiet months because of holidays in the US and Europe, and the large global traders and fund managers typically take their holidays then. But notwithstanding that, if you look forward, I believe that there's likely to be enough events that we won't see those real slow days where we saw 8 billion traded and 11 billion traded. I think as we reach towards the end of the year, it's not going to be like the first quarter, but I do think there will be enough events happening in the market that we should see value traded holding up, I would hope, between the 18 to 20 billion rand mark, not to say that there won't be very quiet days.
That's Donna Nemer, Director of Capital Markets at the JSE, speaking to Fifi Peters.